Banking tier lenders. What's the difference? Do they matter? Today we're going to cover off a few questions that we get here on a daily basis, and I guess for full transparency, this is not financial advice. We're just going to be talking some general terms here. But again, what are some of the differences in terms of your different tier lenders, and is it worth pursuing going from a tier 1 to tier 2 and tier 3? So going to just, I guess, walk you through that today and what are the pros and cons on those. So I guess if you're not familiar, what are the differences between a tier 1 to tier 2 and tier 3? Your tier 1s are your major banks. So things like NAB, CommBank, Westpac, they're typically almost like volume loan outputs. They will typically come with lower rates. They'll have also, in terms of the negative, they'll have lower serviceability points, and they also have stricter policies. So they're a lot more conservative, and that's where most people start out. You know, you're going to get yourself into a really competitive interest rate. Maybe you're a home buyer, maybe you're a first-time investor with a lot of serviceability for you. You're typically best set to go down that route, and most people will look to maximize their servicing out in your tier 1 lenders before progressing down the ladder. Tier 1 lenders, ASIC regulated. Then you move down to your tier 2 lenders, which are still ASIC regulated. So they're going to be places like Bankwest, St. George. You're going to find they have a slightly higher interest rate, but they might also give you a slight more, higher serviceability. And the reasons for that, they may have different add backs. They may just have, lesser policies around what they're running their servicing numbers on your spending. And again, you might transition from tier 1 to tier 2. Then we move into our tier 3. So your tier 3 lenders are places like Liberty, Pepper Money. Now, they're normally going to be for people in specialized circumstances. So particularly people that may be self-employed, they're struggling to get finance through tier 1 or tier 2 lenders. People who have maxed out their serviceability in tier 1 and tier 2 lenders will also go down to your tier 3 lenders. I guess the big benefits of getting to a tier 3 lender is actually being able to get access to money. At this point, if you're at the tier 3 level, you've basically exhausted what you can do with your tier 1 and tier 2 lenders. So sometimes your tier 3 lenders all you want to go. And there is no real reason to avoid going into a tier 3 lender if you're not able to go into a tier 1 or tier 2, because though you do have higher interest rates, as an investor, we know that we grow our wealth with the power of leverage, right? So we're not going to be able to go out and buy that $500,000 asset and, hopefully see that double in value over an 8 to 10 year period if we're not in the game. So getting into a tier 3 lender, they may have, or they will have that higher interest rate, but that higher interest rate might be somewhere between 1 to 2%. If we say it's at 1.5%, on a $500,000 property, 80% loan, we're talking about $6,000 extra in terms of costs for your interest for the year. That property could be making you $40,000, $50,000, $60,000 in equity growth each and every year. So you've got to weigh up, is paying $6,000, which for most people is also going to be tax deductible, that extra interest you're paying. So depending on your tax rate, you're going to be getting a large portion of that back. Are you best placed for your wealth creation to make sure you're still in the game and going through that tier 3 lender? And for me, that's always a yes. I'm always wanting to just get access to more lending and build my asset base up, because that's when it's going to grow my wealth. So I hope that clears up a few questions we get here on a daily basis here at advisory level. Again, just to recap, this is not financial advice. You should always speak to an expert, particularly a broker or accountant, in regards to which one's best for you and which tier lender makes the most sense for your overall strategy and personal circumstances. But again, there's no huge negative. For me, it's about getting into the market and building your asset base. Guys, my name's Julian. I'm the head of strategy here at Ripe House. If you like this content, please click the like button, leave a comment, make sure you're subscribed. Also, make sure you're following me on LinkedIn. We'll be sharing a lot more data and reports through that channel as well. Looking forward to catching you on the next one.